all the CEOs present from various Saccos, my colleagues, and also invited presenters. Good morning. When you're back here, you feel the hall is full, you know. I can see a lot of gaps this side. We hope we have about 130 CEOs present, which is about 2/3 of the numbers we expected, which is commendable. Thanks very much for, honoring this invite. And I'm told there are two or three programs running within the sector. I'm reminded the statistics yesterday were not very encouraging on matters COVID. So if you have your mask, feel free to wear, protect yourself, and so it's good. That's why I'm reminded. Let's observe that, if possible, if you have, because the numbers are changing the trend. And but the grace of God, we trust it shall be well. I can see Dr. is already on his. Thank you. Let's feel free if you have them. We always carry them, so it helps. I think mine is simple. Having done the introduction, you know your neighbor, and like most of you say, there is a lot to learn through this networking, and I believe if you can't hear me at the back, please shout. I can adjust so that these systems can be adjusted. For those who we may not have interacted, Peter Juguna is my name, currently serving as a CEO and therefore team leader for the Sasra team, and we are happy to have this inaugural roundtable where we interact with you. And I've heard from you, the expectations indeed are very, very high. Some of you are very, very expectant, but we believe together we shall be able to come with a way forward. We believe in a very collaborative approach because regulatory framework cannot be effective without those discussions, conversations. So this is one of the many that we shall have. But for that to be effective, with me is my colleagues who, just like the others, I think the mic. Now, Peter, you have set the trend. They can also be given the mic so that they say whom they are. Most of them, you may have interacted with them one way or the other. I think they can introduce themselves and please face the team. We can start there, yeah, the front. Your name is Forum in a few minutes. But I think together with us, we also believe, like I said, collaboration, not just with the Sacco industry, but beyond the Sacco industry. So as per the program, we'll hear from Central Bank team, who are, Governor was gracious enough to give us two of his, officers to share with us, like some of you said, the broader view on matters cyber, because CBK is in charge of the, one of their mandate is that, stability of the financial system, which includes even ourselves. And therefore, they'll be giving us insight on what is happening nationally, and also closer is a question of banks, where you offer payment services, they offer payment services, what is happening. So with us, we have Fred and Grace who will share with us. You'll hear more about them. We are also expecting Safaricom. The systemic importance of Safaricom can never be ignored. They play a very critical role due to the M-Pesa platform, and therefore, we've, for the last couple of years, I think it could be the 3rd or 5th year, we've partnered where we have market forums and where they're able to share the trends in terms of matters mobile fraud and cyber threats with the mobile platform, M-Pesa platform specifically, and they have become a very, very key player in our economy, especially when it comes to mobile. So they'll also be coming to share with us what they're observing from the mobile, payment platform, and what is it they see as a solution. Because while your expectations are very clear, what is it we are proposing? Critical is that all of us have a role to play. These are collaborative efforts, it's a partnership. So most of the resolutions discussion will be having, it will be asking questions, what will be your role? And how do you play your role more effectively as the CEOs, the captains of the industry? And how do we play our role? Because if you don't play your role, doesn't matter what we do on this end, and doesn't matter what other players do. If you don't play your role, the team will not, win the war in building resilience in terms of cyber threats. So I think for us, I want to encourage that, openness. Let's share ideas because we feel you are the wearer of the shoe. When money is lost, you are the one who absorbs the losses. We may come up with the guideline, and therefore we want you to be very candid. What are the issues that you think we need, whether it's governance, whether it's cyber issues, whether it's matters of external auditors, because those are some of the issues, and they are all very, very key, especially external auditors and matters governance, those two guidelines, they affect a lot in terms of even what you're about cyber resilience that we are aiming to. So see yourself as a partner. That's why we say we invited CEOs, because you are in the kitchen when this action is happening. You are there. So what is your experience, and what perhaps do you need to change? And we want to enrich that conversation with, the insights from CBK team and also insights from Safaricom. We've already heard from the integrators. We had a meeting with them sometimes in February, and they gave us their insight as well. They also submitted a memoranda, which will also be taken through in the afternoon, so that together we believe we should be able to, we may not eliminate, because like I said, these guys are ever ahead of us, but together we can mitigate and build a cyber resilience to a level where we minimize the threats on our institutions. So at this point, I think I want to submit one. We were expecting the director of cooperatives, Nakuru County. Unfortunately, this morning she got a commitment, and she said she'll grace the meeting tomorrow morning. So that bit we shall skip, but she had indicated she may send somebody, a representative possibly from Naivasha sub-county. I don't know whether that person has arrived. I don't know where my team can confirm. George, you can confirm with he or she has come, but she was to consider that option. But nevertheless, feel at home. We are in Nakuru County. At least Jane received us. Just Kamuria, he received us in Nakuru. Yes, Nakuru County. We had asked the host director to be with us, and we believe she committed to be with us tomorrow. So on that bit, we shall skip that. So I think, so that we dive into the meat of the substance of the day, we would want at this point to invite our director, Mr. Robert Mburu, who is a cooperator in a big way, until he was appointed in our board last year, October, I think. So when you look at, you have to ask for their CVs when you realize he's a veteran. So I think we are in safe hands, because a person with audit experience in the cooperative sector, with who knows and has the matters cooperative at heart, and therefore in terms of insight. So one director, I think, is opportune to address and open this honorable gathering of CEOs from the Sacco. So join me in welcoming him to address us.
Good morning, everybody. Bwana CEO, first of all, I want to introduce my name. My name is CPM Mboro Mungai. Been an auditor for many years, and I've seen quite a number of cooperatives that I audited when I was a young man. And I'm happy to be here today, this morning, to join hands with you and to welcome you to this great occasion. I've heard some people saying the 3 days occasion by Sasra. Sasra is a big animal, and we want to demystify that animal so that you can interact with it and you appreciate the role that everybody is playing. It's now my great pleasure to welcome you to this very important regulatory policy roundtable, the consultative meeting invited by Sasra. Allow me to express my sincere gratitude that you are honoring us by accepting our invitation. What is this roundtable? Quite a number of young CEOs who came the other day will ask what a roundtable is. It does not have a head. A roundtable does not have a head. And therefore, the round table means your views, your suggestions will be accepted. That is a round table. And is normally accepted generally worldwide when different forums or different cocoons, they want to discuss about what is affecting them, not just the regulatory. But when we come to the regulatory issues, I want to introduce and bring forward what we'll be discussing in the next 2 days. The regulatory roundtables are small informal groupings and workshops periodically held, during which key stakeholders, and in particular the sector that we are in, wants to do exchanges and create policies. It provides a forum where an in-depth discussions of public policy, challenges and works, and the interests of the state's broad-based business community are held. So when you come here in this forum of Sasra, you will understand what Sasra guidelines, what legal issues they bring, what financial issues they bring, what the audit issues that are there. Remember, you are audited by the auditors. That's a small part of a regulator. When the advocates within your board comes within your organization, that's another regulator. But in the broad, the Sasra comes in to grace that occasion that looks at every stage of your organization. We have other financial players in this country. We have Equity, KCB, all those banks, and interact very well with the regulator, and the regulator being Central Bank. Wherever Central Bank is there, they call them, and they have the Roundtable where the issues are normally discussed. Therefore, in hosting this occasion today, the board and the management of Sasra found it necessary that the CEOs are the most important in any organization. And if anything happens to any organization, the first person to receive the bunch is normally the CEO. If anything happens to any organization, and I'll give you a very simple example. I'm the chairman of a small school. And whatever happens in that school, everybody here remembers a school called Starehe Boys Center. There was a gentleman who was the CEO. The effect of that gentleman, the death of that gentleman, affected the entirety of Starehe Boys Center. So the role of the CEO is very, very important in every sector that you play. And therefore, we found it necessary that the CEO, being the stakeholder, the main stakeholder, to be given the 2 days. You set the pace, and the decision, the policy makers, that is the chairman and the board, comes for 1 day to grace the occasion and to know what you have discussed. And we start from a very humble beginning. When we come to regulation, we start from a family sector where the father and the mother are the regulators of the family. When the father gets in, everybody knows there is some rules to be followed. They may not be written, but akikohoa, everybody knows that rule says so and so. But he gives the children an opportunity to interact. And that's why Sasra comes in. When they kohoa, if you have done wrong, you know you have done wrong. But does not mean they are going to punish you, because he's your father. And your father cannot derail you. Your father guides you. And he can beat you up, and the following day you start talking. Is that true? When your father or your mother beats you, he's the regulator in that home. And therefore, it does not mean when the father beats you, tomorrow you start quarreling with the father. He was just guiding you, and that's the role Sasra plays. Similarly to the schools, the principal becomes the CEO. And anything, when you see a school doing very well, it is not the chairman or the BOM. It is the CEO who is the principal. And therefore, the key role that we have bestowed on the CEO, we made sure that you come for 2 days and you are able to interact with us so that you are able to learn more and to guide your societies, the Sacco society, very well. We had a choice of having you and the non-deposit taking cooperatives. But we found it necessary that being the first one to have been regulated, and the decisions that you make in the deposit taking, that we give you the first opportunity. And what we set as a roundtable will give us a guide when we come to non-deposit taking in the next forum. Within our economy and in the Vision 2030, we find every sector has a role, and they're affected by both politics and economic blueprints that are printed by various organizations, Treasury, and everybody else. But unless they have a united front, they will always be affected. When the budget is read, every time there's a financial aspect affecting our sector, the corporate sector. Whether they are setting up the interest rates, whether they are setting up the regulatory, whether they are setting up, all this will affect our sector. And therefore, the moment Sasra brought you in, they can talk on your behalf, but they become more stronger when you are united and you come with one paper. So that when we face our minister, when we go to Treasury to vote for you, it will not come from Sasra. It will come from what you guys have said we should go and present. It's necessary to realize that the sector we are controlling of 800 billion, it is a very important sector when it comes to budgetary issues. And we cannot articulate what you guys want, what the Sacco wants, what the financial model wants. It is from this forum, the Roundtable Forum. They say it is biannual, but if you decide that you need it half-yearly, it is upon you to get today to set the pace. And it happens worldwide. Whether you go to West Africa, Europe, this is a forum that every regulator needs. Whether you are in this platform, what is affecting you? Are you being affected by the IT, the fintech, the new technology? All these are affecting the Sacco society. The new entrants who are not regulated, they are affecting you. And therefore, it is today's, whatever you discuss, the points that you bring forward, that is very necessary for us to take forward, make a paper, and do a presentation. And when we shall be talking, we will not only talk about Sasra's requirement, we'll talk about the regulation in which we have done the policy on finance, the policy on auditors, the policy on reviewing. All these are supposed to be captured. Hopefully, we want to suggest that we have a roundtable annually, but again, Sasra is open to suggestions. And once you come up with those suggestions, we in the board will be able to take it up and will be able to offer the guidance that are required. I'm representing today, I'm the chair of the board of Sasra, and with me I have others members who never came today, but I would like to mention them because the government has found it necessary to have a very strong board. We have a representative from CBK, which is the main regulator in the finance market of other financials. We have the cooperative, the Commission of Cooperatives, who of course is a regulator on one side and very strong supporter of this movement. We also have Treasury because of capture of data and everything else, and we have 4 board members who are independent. I represent them. And therefore, the government has put a lot of weight in the Sasra regulation, but as I opened my remarks, the Sasra is there to guide you. The Sasra is there to talk to you. The Sasra is there to give guidance. And they don't give guideline to one cooperative, one society, one Sacco, and they do to other. It is a global thing, and we look at it in a global way. And therefore, when something happens, as I said, the CEO comes first. And that's why you have been given the 2 days. Allow me to conclude by welcoming you to this forum. And I want to declare this roundtable discussion officially opened. Thank you and God bless.
And I think he's articulated, he's become a very, very important, interface between the policy making by the government in general and the business and the industry, and you are the captains of the industry. So I think without much ado, I think we can now proceed with business. Thank you very much, Chairman. On behalf of the board, we will now proceed to make my comments. To just give you a feel, given the policy context, now we can delve. CEOs, we are technical. Now we can go a little technical on the issues on matters Sacco industry. Now, I think I know we do officially communicate through the Sacco special report in terms of the state of the industry, but which is due in the next sitting of the board is when it will be ready, because the cycle is such that we close the audited financial statement, we have received them, that is the data that we synthesize and present. But I think we have the advantage that we can share what is emerging from these reports, because I think for the first time, I think we are happy to say that the 800 billion the chairman has talked, I think in the next possibly 2-3 years, even possibly under 3 years, we could be hitting 1 trillion. If you consider even growing by 9%, we shall be at 1 trillion. So the central bank team, you can see the 1 trillion touching 5 million people is no mean. In the banking sector, I'm told there is one bank now with 1 trillion. Is it? Is it 1 or 2? I think there is one, is it? There is one with 2 who have hit 1 trillion in terms of their balance sheet. But I think we consider Sacco sector is unique, its information, its purpose, given the socio-economic mission it advances, being owner, customer, business. So we are talking of 800 billion now, surpassing that this year. But I think significant for me is that this is all funded by yourselves. 75% consists of loans that you advance to your members. That has been sustained and replicates itself across deposit and deposit-taking circles, which is we have remained faithful. And that is one thing I find major difference between banks. In a bank, you can withhold lending and invest in government securities. For you, you don't have a choice. Your owners are the customers, are the borrowers, so you have to lend to them. And therefore, at 75 just means you have been faithful to the very calling of that. I think what is emerging, and this is significant for this meeting, is that the deposits, they used to be above 70. Surprisingly, right now, we are actually at 70 and dropping, especially DT Saccos. Deposit-taking Saccos are doing better in terms of ratio of deposits to actually loans as opposed to ourselves. And that's a point from a business strategy point of view. I want to hear your views. What is it? Because it's a major concern to us because, when you are liquidity constrained, then your loan-to-deposit ratios playing above 100 and sustaining there, that from a stability perspective is a source of concern. And the question is, why is this happening? It will be nice to hear your insights around that. For DT Saccos, non-DT, the ones we just onboarded, apparently they are playing below. They're about 90 something, meaning their loan-to-deposit ratio is about less than 100. For you, for the last 10 years, you've been an average of 105 upwards. Actually, this year, next year, this year is actually 110, if I get it wrong. I think, is that so, Jeremiah? 110, meaning you're spiking up. Why? Deposit growth. What is happening? You are growing more in loans, deposits, okay? Yet, which is, of course, there is a capital, which we believe is funding much of this, because the loans, the external borrowing is below 4%, which is good, because we want you not to borrow. Yeah, don't go to the banks, mobilize your money and lend. And therefore, it's been remained for the last 3 years actually below 3%. So that is commendable. But when you look at the composition between the deposit and deposit-taking circles, now of the 800, 85% across all the parameters, 80% of the 800 billion is actually coming from yourself, underscoring your significance in matters financial sector, financial provision of financial services, matters financial inclusion, but also that underscores the stability question. How, as the captains of the industry, we need to be conscious of now, when you become big, in case of any problem, what does that mean for the Sacco industry and the broader financial sector? The risk, the risk, the risk. We have to, our antennas on risk management have to be higher. And that means affects a lot of things, matters cybersecurity, matters governance. We have to be really, really conscious about that. The small Saccos remain a big, they have been, I would say that in terms of the share of this market, we have noted a trend where the large Saccos, above 5 billion, are, taking a bigger share of the industry. High concentration, as we say in regulation, there is an increasing concentration. Even banking industry is not different. The large banks will always take 2/3 plus of the deposits, the assets, the loans, and the like. Is not unusual. But the question is, for Saccos, remember these small institutions are back in the sub-county headquarters, they are in the villages, it's a small farmer. So, I mean, what does it mean for them? Because most of you, even if you grow, you expand, you only sit in the county city. That's where you actually park. You don't go beyond that. So what happens to those rural small Saccos is a question for us as leaders in the industry we have to think through, because unlike banks where the owners will pull back, where they are not making money, these Saccos are set up in Karachuonyo and the likes, because there is a need there. So there is a farmers, there is a fisherman, maybe the beach management units or dairy farmers. How can they be assisted in their locality because of the uniqueness of that? Because we all started in a small way and we grew. So what happens to this institution? So it's a matter that we like throwing to you from a discussion, because some of you are in that tier, because you note that the 34, should I say 39 now in 2021, large Saccos over 5 billion are actually accounting for 67%. That is when you put the non-deposit taking Saccos. And when you remove that, you take just deposit, they're going to 3/4 of the 700, almost 700 billion is actually in the hands of the over 5 billion Saccos, about 30 something. So it tells you the concentration is growing, is there, but the policy question is, if these small institutions are edged out, what does it mean in terms of the Sacco industry and their presence being localized community institutions that are driven by the grassroots need of the communities that promote them? So that's an open question, and you'll see as we continue the conversation some of the thoughts that we want to share with you. So basically that's basically the state of the industry, fairly stable and aggregate terms. A few Saccos, less than 20 of the 175, you find that they are struggling with the capital and therefore liquidity. But when you unpack that, you actually realize the capital challenge or liquidity challenge is a symptom of a deeper problem from a strategy perspective. It's about competition that they are facing and capacity in terms of financial, human, technological, and all that. Because once you're endowed financially, the rest you can sort. So these become systemic for small institutions. You find the same obtaining other markets. Smaller players in the industry will always have to invest, to work harder because of the constraints they face, which are organizational by themselves, but also in the market, because you and me prefer well-established institutions that have what you look for. After all, you are a customer, you are choosing. And that's why we find that the large Saccos are growing by branching out, having better technology platforms, so they are more appealing to the larger population. Today, if you go to a place like Wasigishu County, all the large Saccos have a presence there. Okay, they have a presence there because they can go to the market and deal themselves. They have already ready products. A smaller Sacco will not be able to perhaps beyond the sub-county, it will face a problem. So it's a serious issue, especially for Sacco industry. We are talking about financial cooperatives. There is one CEC who told me Peter, you have to tell me what is the problem with my Sacco. I have three or four, but I am always being called to open branches by Saccos from other counties who are struggling in terms of capacity in many ways. The model of cooperative from Raiffeisen and the likes and Schulz, the Germans, was not that Saccos will learn on its own. The strength of a cooperative financial system is the primary Sacco plugs at the next level, at the next level, at the next level. It is that gives us our strength. It is not one institution running the full race and you say, I've won. That is not our strength. Our strength is coming together cooperatively to cooperate and say, what are the common services we require? What are the common infrastructures we require? How do we build the rails? Or how do we leverage on the rails existing collectively, not individually? And that is the challenge we have, because that affects your stability, your ability to serve your members, and that is the motivation for shared services initiative. And this we've been working for the last 3 years. We started 2018 when we started this initiative through a study, and I'm glad that we invited you, all of you actually, and now 54 Saccos responded, and we have a group of 54 Saccos we are working with, where they have formed themselves to a project steering committee, supported by 2 working groups, and we've been working with them. That's why I call it a concept, an initiative, because we wanted to converse with you, because we do not have the monopoly of knowledge. And significant is that until you find the use, business need in the sharing of common services, it will remain a concept. But I'm happy to say that working with this team, and I thank the CEOs who are part of that. How many are here? CEOs and all Saccos that are part of that initiative? Yeah, quite a number. So CS Dedan, where is he? Ondieki. Yes, already you have your neighbor there, so you can start telling you what it is. It's better told by them rather than myself. So the point here is a conversation, is a discussion to find solutions to industry level problems. And I had one of the CEOs talk about the clusters. Basically, what we did even in that discussion, we made sure that all the different clusters of Saccos, original farmers, community-based business community, public sector, teacher sector, are represented to get diverse views. And we are happy to say the legal framework that we proposed and that is one of the outputs. We had legal framework, we had the bylaw, and we had scoping of the requirements for the shared technology platform. Those are the 3 outputs we got. On the legal framework, it just got the approval of the cabinet last week. Yeah, last week but one, on 12th, when the cabinet met. I'm sure you've read in the papers. That is now awaiting transmission to the AG towards Parliament, so that it can be legislated and we can have a legal framework for licensing and regulation of shared services. Okay? This is not unique to Kenya. Other markets have similar structures, but I must say in Africa, we are the leader in terms of this development. US, North America, Brazil, they already have this. We don't have this issue of one single Sacco. Actually, in Brazil, they call singles. I think they have less than 200. And the rest are in groups, like 5 networks, okay, which group. So you associate yourself, and they are authorized and regulated by the Central Bank of Brazil. And that's how they drive efficiency. Very, very large and successful Sacco system, which has been supervised by the Central Bank from 1970s. So it's not unique to Kenya. The question is, we are not copying a model, but we are trying to ask ourselves what can work for us. And therefore the challenge, as we expect this to go to Parliament, the challenge to you is, how do we add our voice to this policy conversation so that it is not seen to be as a Sasra agenda, government agenda, but you actually acknowledge you need it. Because if you don't need it, you better not go on. And therefore, through the Sacco, 50 Saccos who have promoted Sacco Central, we believe we'll be able to have a conversation all the way to the legislators so that they understand. Because the challenge we are finding in the last 10 years we've been around is that there are policy initiatives which we bring to you and you say they are okay. But we submit to Parliament, which is our job, through the ministry. But once they go there, they stay in limbo in Parliament. And if we are able to organize ourselves as an industry, especially the market side, you can add our voice and say, these policy proposals are to do 1, 2, 3. We need them like yesterday. I like the fact that when Musco case went to Parliament, the senators were able to engage with them. And in their recommendation, they said, central liquidity facility, question of shared technology platform, and DGF are critical to avert the problems we have seen in Saccos like Musco. From a liquidity point of view, because you die on your own. You borrow to your bank, you borrow, you are digging your own grave. Borrowing will not solve your liquidity problems. Technology platform, you find Saccos in trouble don't have good systems. But a shared technology platform is a highly efficient mechanism for Saccos to access those capabilities. So they actually said, so we have the policy support from the legislature, so you're expecting this will actually find is a time. But you as an industry, whichever way, and we believe we have the will and capability as captains of the industry to find a way of voicing yourselves away from the industry by saying we support these initiatives because of 1, 2, 3. And you know the leaders, they represent your counties and the like, and you have forums, even at county level, where you interact with them. You pay them courtesy visits, and they are your members as well. So you need to find a way, and those are some of the issues. How do we add our voice to policy discussions so that they don't stay there, okay? And I want to borrow the experience we've seen of the banking industry. We have the CEOs through the KBA are able to speak, but we must have something written first. So what is that we add? We document, we have a document that speaks for us, and all of us can articulate it in the same way. So that's the challenge I give to you. I want to add that this shared technology platform becomes very critical in addressing some or even cybersecurity at a central point. You have a same, command center, because to us, there has been a structural and policy challenge that is not talked about much, but we believe it's at the heart of making you dependent on other providers, on your competitors. And that is what this shared technology platform, CLF, are providing. And you do your research, you'll actually find access to payment system is a public good in other countries. But today, it's only regulators of central bank that are. So what is it? What are the requirements in Payments Act that you cannot meet? You cannot meet them individually. Some of you have tried, but you have to have a special purpose vehicle that you build, that you support, that makes sure it builds your capabilities. Question of inter-Sacco lending is provided in the Act. You can pull your liquidity together so that you can, downstream it to, and it plays within the industry. But again, we don't have that. Every time you have a liquidity issue, you run to the bank, and at a higher cost, commercial terms. It's not meant to work like that. That's not how Saccos were conceived. So it is very critical as deposit-taking institution you realize that some of these structural issues are for the competitiveness and sustainability of the Sacco as an ecosystem within the deposit-taking market. That's how it was conceived. Let's not try to invent the wheel about how Saccos work. If Saccos, especially the level you are in, you are growing and growing very fast, you need to make sure that fundamentally the pillars, foundations are right. You cannot, nobody will ever step you to give you liquidity for survival. And if you look at liquidity, is usually at different levels. Okay? You need to distinguish what is liquidity for your working capital, what is liquidity for long term, because when you understand this, you realize why you need this. That's why other markets you look at, we have interbank for short-term daily liquidity for settlement. Then at the end you have, the lender of last resort. And I'll tell you, by the time you go to the lender of last resort, the central bank, you are in the trouble. I better borrow from the market rather than go to the central bank to borrow, because it's not a very good thing, because the very business you're supposed to do of deposit mobilization, you are failing in it. That's why it's called in our economics lender of last resort. So there are market solutions that are there that exist not just in the banking system, but in the Sacco ecosystem in other countries. And when you talk about central liquidity facility, it cannot operate without a shared technology platform. because you need to have a single view of the market, so that when you are borrowing, you can know you are lending to this person, but his position at any one time is seen by the regulator or other referee. So lastly, the shared technology platform particularly, and the question of central liquidity platform, because that's also a shared facility, is that it is the one initiative that is the gateway to a mature Sacco industry. You know, we must grow up. Yeah? We have been dependent. Some of you are nurtured by your employers. You became independent, kicked out, you can rent, pay staff, pay rent, and you can operate. But I'll tell you, the next level of interdependence, as we call it, or mature, requires us to have greater strategic cooperation and encourage interdependence within the system. It happens all the time. Banking industry, you can hear of interbank. Interbank is banks having lines of credit on mutual arrangement. Interdependence. And deliberately, a bank will put excess deposits with another bank and with even central bank, because they know there is a day they'll be short of liquidity. And if you don't place some money there, you cannot borrow. If you don't extend line of credit to me, I have no business. So interdependence becomes critical. There are banks that settle for the others. And our colleagues from Central Bank will tell you, even Visa card, not every bank settles at Central Bank. There are a few banks that are authorized to settle on behalf of others. That is interdependence. It does not make you a lesser Sacco when you cooperate with the other. It only causes to make you better at offering services to the members. How do we then cooperate? And what are the hanging, fruits, quick wins that we can actually cooperate? So the question of getting us to the next level, maturity, interdependence, will not happen without shared infrastructure, because we cannot wait for all of you to invest in the right technology. But together, we can invest $1 billion. We can invest 500 million in a robust, secure, resilient system that will pass the test of the payment regulation requirements, and not just national, but international. Because once you get these cards, payments system facilitates transactions not just nationally, but regionally, continentally, and globally. If you want to play in the intra-Africa inter-trade, you have to have an infrastructure. And you people are the ones trading. So how do we build that future? Because it's about being futuristic. It's about saying, where are our customers going? For you who are opening up your bonds, you have business community you are serving, they want to import, export goods. How do you make sure that every money paid, including foreign currencies, remain with you? It is possible. You find those developed markets, Saccos support their farmers to export, import, and it works. Why can't it work here in Kenya? It's about our imagination, it's about our resolve to learn that it has come a time when we have to work together. And that's a question of shared concept, to build a technology platform, to build a central liquidity mechanism that can facilitate this. That is for the shared services. Why is it important? And I'm posing this to you because we want to get your questions clarified so that you are clear about the vision. Because once you are clear about the vision, the strategy will work together. Consolidation is provided in the Act. We do have what we call amalgamation and division of cooperatives in the Sacco Societies Act. But in our 10-year history, we've not seen a single Sacco amalgamate or offer to amalgamate with or even acquire another one. We don't like using the word acquire. That applies more in the corporate, share-based corporate. But the number, if you look at the concentration of the industry, this is a conversation you will not avoid. Somehow, you will not avoid it. Whereas the shared services concept to us is motivated by addressing the challenges of small Saccos, where we find deeper financial inclusion challenges, deeper financial stability challenges, it cannot be the only initiative. And that's why we need to add the conversation about consolidation. And consolidation, it has to be market-driven. It's a discussion you as leaders of the industry will have to have. Look at it objectively. It's not because you are a target of acquisition, but how can it benefit our members? how can it benefit my Sacco, rather than waiting to be closed. Okay? And the design of Saccos means that closing a Sacco comes with a lot of noise, which at times we find disturbing, because in the Sacco, I like giving there's a reality about Saccos, but at times there's a sense that as leaders, we don't internalize its implications. In a Sacco, you are the owner, you are the depositor, and you are the borrower. Okay? So if there is a problem, you'll bear the full wrath of that problem. Let's cross the other side of the banking, because we always say, why are we not being paid by KDIC and the like? The banking is different. The owner is different. I put capital, I'm authorized to collect deposits. I collect deposits from you. And I am not a mass, I lend to you. I borrow to another person. Those are three distinct persons. When central bank closes that bank, KDIC comes in to protect the interests of who? Who does it protect? Depositors. It has no business protecting the borrowers. It has no business protecting the who? The owners. In fact, the owners have been told, you are unable to run this business, step aside, and we shall even charge you. The borrowers is, we follow them to pay back the money we give them. And in a bank, it's easy, because 100 million, 10 million, 20 million is in the hands of one person. In a Sacco, 20 million, how many people have you lent to? George, 20 million. How many people have you lent to? Thousands at a time, is it? So collecting is a problem. So let's not even think about liquidation, because it's nasty, painful, because you are dealing with the same person, but he's the one who borrowed and did not pay. So, therefore, consolidation at the right time must be seen as a strategy. A strategy for your growth and to avert that pain for your Sacco. And it starts with you internalizing that we are a Sacco, we are not a bank. We must understand when a Sacco starts falling, there are decisions by the owners through the AGM. There are decisions by the board, it goes to the AGM, and everyone says it's good. But when the house starts crumbling, what happens? People want to jump out of this ship. What does that do to this ship? When you start getting withdrawal requests, what happens? What are you doing? Digging a deeper hole, is it? Because you are caught with a decision as a CEO, do I pay out the 1 million to this guy who wants to leave, this member who wants to leave, or do I lend? And that guy will push you. The bylaw says it's 60 days. He comes to us. We tell you to pay. Because, that's what the bylaw says. So how do we avert these kind of realities? Because they are here with us. We are experiencing every day. But it all comes to one thing. There is a unique position Sacco seat, that you are an owner, customer, financial institution. You are not just a financial institution, which can be closed, like Resolution Health was closed, and then the resolution authority, policyholders, will sort the policyholders while dealing with it doesn't. So we got to internalize this concept and face the reality, because at times members put pressure because of not understanding that in a Sacco you are the owner first, and therefore any consequences of closure you'll bear them full throttle. In fact, the question comes, when the Sacco starts being in trouble, should you allow people to leave? Yeah? Because if they leave and I leave with my million, it means if this Sacco is closed 3-5 years down the line, those who are who are left, will bear the full loss. If I had $1 million, chances are I cannot get it. I might get 0. If I'm lucky, I'll get half. But the people who leave earlier means they get full benefit. Why? So as CEOs, we have to be alive and start having this conversation so that you see, where is my Sacco? What is the risk before you get there? And it is harder for this conversation to be heard or conversed with the Saccos that are in trouble. We better have this conversation when the rains are not beating us, during the good times. And the good time is like now. And of course, that speaks to the DGF, the importance of DGF, Deposit Guarantee Fund. We are stuck at it for the last now 3 years. 2019, we came to you with the rules for nomination of the Board of Trustees, which then the CS should appoint to form the BOT, the Board of Trustees, which is a governance body to run with this. I must report that December, we started the conversation. We asked the Cusco, using the guidelines that we gave them, to coordinate yourselves and give us the names of the 4 trustees that we need. We are waiting for them to get back after their ADM to see whether we can close this matter, because we need that body running like yesterday. But however, we are alive. If we don't succeed in that way, we shall look at other options. But at the end of the day, we are convinced today an amendment to the Act is inevitable, because the Act gives us the mandate to coordinate you people to give us 4 names. We feel that should be the job of the CS. But we require amendment to be pursued to actually have the powers donated to the CS to nominate the 4, because if that were the case, that BOT would be up and running. That is what happens to other policyholders' compensation fund, capital markets and compensation fund. Yeah, is that what it's called, Peter? Capital, the investor compensation fund. Yeah, investor compensation fund by CMA. There is a policyholders compensation fund in the insurance sector, and we have the KDIC, the Kenya Deposit Insurance Corporation, which it's a full corporate, full state corporate, just as policyholders compensation fund is also a full corporate, but they started small, nurtured by the regulator. That's where DGF is. But the vision is, in the long term, then it should be a corporate. But why is this significant? A regulator, prudential regulator will make sure you play by the rules. But it's also a life that some of you will fail, inevitably. It's a random thing, we don't know who. You will fail. And the DGF comes in as a safety net to actually ensure your orderly exit, depositors are paid some money, and there is an orderly resolution. That is not competencies you have that are bestowed to the regulator, not at all. Because the first question I'll be asked, what happened? I'll be asked to answer those questions, what happened? Okay, we'll even be sued that we didn't do our job, we slept on our job. We have had the same in other markets. And it's normal, but before we close an institution, there's a lot of work that goes into it. The kind of conversation, very difficult, that we have. And therefore, again, DGF is one element that is very critical, another very critical pillar beside the shared services concept, to actually add another pillar to the stability of the sector, so that any institution in trouble, you can say proudly that you are actually guaranteed up to X amount. But there's a lot of thinking to be done again, because of what I said, most of you are net borrowers, at least in your books. I don't know, is it by design that we usually make sure we are overborrowed in our Sacco? Is it by design? So that in case of anything, you are the one to pay in the Sacco. Yeah, why is it so? That loan to deposit ratio for most of us at individual level, we have more loans than deposits. Okay? And therefore, that itself, they have certain incentive. There are markets like US, I think, where the directors were not authorized to borrow from their Sacco, so that they only have deposits. So they are net depositors, and therefore they'll do everything possible, because in case of trouble, who loses? Actually, I think it is staff and directors, right? It is staff and directors. You are not allowed to borrow from your Sacco, so that you are but you can save, and you must save. So that makes sure you must be very prudent. But today, at times, we wonder, if we pull the plug in this Sacco, if I look at the borrowing, the CEO is the one with the highest loan. The chairman follows. So did they know that there is trouble here and they borrowed more? And therefore, they'll be happy, because collecting loans, retail loans, is a damn hard job. So these are conversations that will happen. How do we then mitigate? Therefore, DGF can actually assist in this, but there is a conversation around there. How do we make sure that you as leaders and the boards actually have that consciousness in any decision you make? You see what risk does it pose to depositors? And it's very important for the sound, is because we've been allowed to do a lot of banking business today. You do everything a bank can do. You are issuing checks, you have ATMs, you have everything. So that means risk is always hovering our minds by the decision you make. As I conclude, I think the other development is a recent one. CBK is now licensing and regulating the digital credit lenders. I think this is a wake-up call for you. Some of you have digital products as well, loans and the like. But I think significant is to say, just like when you are prudentially regulated, when you are prudentially regulated, then there is a higher confidence, increased confidence, greater legitimacy in the business you do, and that means competition for you. Okay? That means stiffer competition for you, because once they're regulated, I'm sure the investors will also want to reap maximum benefit. That enhances the competition. But again, it all questions how are you poised strategically to actually, be able to compete in that landscape. And of course, this talks to your digital investments, ICT investments. You have to rethink how you invest why are you investing in technology, and how competitive is your business, especially from technology perspective. Because some of you are offering those products, some of you are struggling. Yes, we ask you a lot of questions when you are approving because of the risk they pose. So you have to understand. If you don't understand them, for a year you will not be approved. Yeah? Because there are a lot of questions. It's not a question of offering the product, it's about offering it safely. And especially when you are having third parties transact on your behalf. Who has a responsibility? Yeah, in this day of, even impersonation and that kind of thing. And of course, this also speaks to this, strategy which we have adopted for the last couple of years about mortar and brick. Is it sustainable to invest 20 million in mortar and brick today when others are serving their customers through digital channels? Can we start thinking of branch sharing? We go in Kisumu through a shared technology platform. One branch can serve the Saccos, and we have a way of settling at the back. These things work. They work. Correspondent banking. Yeah? Correspondent banking where other banks, you correspond with another bank in Dubai to transact. And at the end of it, there is a way you settle. This technology is there. Why do we have to open every branch in Nairobi, each of us? When we go to the big city, Kisumu, every Sacco is opening a branch. Is it efficient use of capital? Are there better ways you can serve those members? For 1,000 members you have, the 2,000 members you have? Those are questions. We have to deploy capital more efficiently. Not every day, I have expanded to this market, I need a branch. Yeah, we need physical presence. While others are slowing down. Digital lenders are not having any branch. They only have technology. Why can't we think of that? Okay? So those are questions, conversations that we must have while we continue to approve the branches you have asked. It's your choice, but you must ask yourself, is it sustainable that you're opening branch? Why? Is there a way we can remodel our business? And therefore, always, innovation, market innovation are always ahead of the regulator. So while some of you said you'd expect solutions from us, we are just throwing it back to you. That challenge us with the new ideas you have. Branch sharing is something that you can work on your own and tell us, give us the rules. How do you operate? We don't have to create a legal framework. For your information, even shared technology platform, we do not require to have a legal framework. If you guys went for it, it's already happening. But when we did a study, we realized there's a lot of concern, fear of the unknown. There's a lot of mistrust issues, governance, who will be in charge, and therefore the legal framework has tried to address some of those issues, and we believe it will be motivation enough. However, while digital credit providers are coming, there is a silver lining in the cloud that we have seen. Thanks to the data you give us on sector lending, we can actually see where you are putting your money. And the top sectors you lend to, which take nearly 80%, is basically land and housing. Then there is agriculture, there is education, and there is trade, which is basically SME. These are the top areas you fund. But you'll find that these are areas, therefore, you are very strong. If you leverage on that, you realize that the risk, the threat, competitive pressure from digital credit providers may not be as high because you are trading on deposits, which you are mobilizing. So you need to leverage on that because we think that is a strength that you have and you can leverage on that by deepening the reach in that and being more strategic. Because largely, you'll find that DCPs, digital credit providers, will be strong on consumption. Our youth love them. Haraka haraka airtime, 1,000 to enjoy your weekend. In fact, they say on Friday, kwenda hapo, when your ATMs, money is being, withdrawn heavily, the youth are borrowing from Furiza and the like and the like. So there is a way we need to understand that data using technology, data analytics, to actually understand the behavior of our members and respond to products. Don't just fear DCPs are coming. How do you respond? And that requires a more intimate understanding of your membership and what drives them, what are their borrowing behaviors, what is the purpose. Don't just panic. Respond strategically and more competitively. And therefore, we also note, at least Jack tried to say that there is a question of fighting those returns, sectoral lending, and I think we have reminded you time and again, the consistency and integrity is very critical. And therefore, fighting them quarterly, our desire is that we have last year, I think COVID disrupted, last year, this year now we can compare quarter by quarter. Once we establish that trend, then by next year, we should actually be publishing quarterly a credit report on the Sacco industry by sector. That's why we shall be able to speak and tell our story in a deeper sense, not just saying 800 billion with the 75 is loans. Well, that's a tired narrative. We need the data from you, accurate, timely, so that every quarter we can actually publish that data and give it to the market. And that helps you to position you more favorably, because one can say you are not just giving for consumption and the like, but you are lending to the productive sectors of the economy, and that advances your case. So that is one of the areas we'd want your comment on, because we want to publish that data, and we will publish it as it is, once you give us, because we trust you are giving us the right data. Of course, there are provisions. If you don't give us the right data, we can deal with you through the Act, because it's an offense to give inaccurate data to the authority. Cybersecurity and threats is a real issue. Most of you talked about it. There will be a deeper conversation on that in the afternoon, and therefore I do not want to belabor that. The reality is we have become a soft target, but this soft target is largely, I think some of you have built your cyber resilience, and therefore the soft target, the channel which you use. And they say you are as strong as your weakest link. And therefore, the integrators have become a major, major threat to you. And you saw the headline, sometimes that, was it 17th of when? Was it 17th of February, Presta? Yeah, when we were on a Monday, we were the headline, okay? I think those stories must end, those kind of headlines, and it will require a resolution, a resolve from ourselves as the captains, what we do with our vendors, because the question when you see those attacks, whereas you can say, no, it is not me, but the reality is the money seated at Safaricom pay bill has been attacked. That's one channel. There could be others. But whose money is that? Yeah? Whose money is that? So there are questions around there, and the question is, you are the customer to the integrators. Is there something you'd have done different to mitigate that risk? And that is what you want to see through the guidelines you are proposing, to see what is it we can do to tighten and enhance the resilience of the entire ecosystem, not just you insulate your space and you say, I'm safe. No, as long as you have that channel, you are exposed. On the governance issues, I think it's a weighty one. Like I think it's Hassan who said, yes, it's a heavy one. And I think this is out of experience from, from on-site inspections, that we feel that we need to address a couple of issues through governance, reviewing that governance framework by giving you guidelines. And that's why it's one of the areas you'll be discussing. And it's one of the questions we must ask ourselves. We said we are owner customer financial institutions. If that is so, then we should be equally efficient in having the owner resolve complaints that arise from the owner with the business. So questions are about, how do we empower our members to make sure that we have minimal complaints? Okay, why should there be complaints then? Because the owner is a customer. So those are issues. How do we strengthen member participation? And what kind of information do we give these members about the business? What kind of information? Because we must be, one of the core pillars about governance, actually is also the principles in our constitution is about transparency and accountability. Yeah, and for you as a CEO, you need to say, how do we become accountable? How do we become transparent? And that's where you find that those guidelines, there is push for greater transparency. And I'll even add this, that we are considering the financial statements you give us. They have been audited. And whose responsibility is it to prepare them? Who is responsible for preparing those financial statements? Who prepares? Sitati, who prepares those statements? We read responsibility of the board there, is it? Is it board of directors who prepare? Yeah, who? Management, is it? So since it is you who prepare, then our proposition is to enhance integrity and governance. We put them in our website, a portal, where they are available. Yes, let's give transparency. To enhance, let people analyze, let the people ask questions. Because that is one of the tools you are held to account by the members. Because turn up in the membership is just a small number. I know some of you have them in their websites, but we want to challenge you. This is one of the ways of holding yourself to account to the owners. And let them ask questions. They could look stupid questions, but it will help them understand this kind of transparency. So we are requiring more disclosure in the financial statement. Then the next step is that these statements are actually meant for those members. It's one of the requirements, the CAR 490. It's one of the requirements, CAR 490B. And it's their job to appoint the auditor in the AGM who makes sure that you have prepared the financial statement and they are fair and true. So if they are fair and true, situpatia wenyewe. Yeah, let's give the owners. That's the kind of transparency we are pushing for. And in that regard, as far as governance is concerned, we are avoiding the regulation prescriptive, but rather adopt a principle-based approach to say, hey, people, these are broad principles as articulated by ICANN, International Credit Union Regulators Network, as well as WOCU. These principles, can we, guided by them, then ensure we enhance governance. Usually the bit about principle-based is that is a test of are your governance structure sound. There is a regulation, usually guidelines will be below the regulation, but instead of going to requiring this in the regulations, then we make it in the guideline because there is greater flexibility. And as an industry, we agree, then we become, these are some of the tools that we usually require. Anyone assessing governance in the Sacco industry would want the reference point to be these principles. And it becomes a reference point for purposes of strengthening. It's not just because governance, as it were, and I know some of you have said, yeah, the expectations, is a very fluid subject. Because what you consider to be good governance is not perhaps what you consider to be good governance. Because there are certain things, superficial things we do, and you say we are okay. But deep within, there are things that matter, and that is what we need to touch on. The things that matter. What do we truly believe, tested and tried principles that to actually feel we are being accountable to the members. Because like we have been accused in Moscow that, yes, Sasra, you approved these accounts, but we are not auditors. You bring to us, we ask questions, we become satisfied. And you know, some of you, if you are not satisfied with what we do, but I can tell you, for all those years, those were taken to the AGM. So one of the ways as CEOs you must do is to make sure that the issue of governance is not a boardroom matter. It's not just an AGM matter. It becomes member issues. I'm happy my Sacco is not here, but they make sure they push all those things to us through the email. But we are saying that is not enough. Avail it in your website, and even let the regulator also, if you can't do it in your website, we shall do it for you. Avail all of them. That to us will be the real test that we must. Remember, your competitors are required to publish their financial statements, audited as well as unaudited, every quarter. They must be in the papers. And what are you doing? You are giving the consumers the market information to interrogate you. It's not proof, but it's a good practice so that you are removing also responsibility, but also being accountable, taking the notch higher in terms of matters governance. It cannot be AGM and boardroom matter. It must be taken a notch higher to the members. External auditors, we have talked about service providers. Now, those are critical service providers. You have, on the other hand, auditors. Very, very critical service providers to you, and especially when you think about governance, because they are supposed to report in the AGM. But we are having certain reservations about this, and that's why we are saying, can we strengthen this? We have relied on the list from the commissioner, which includes everyone who can audit any cooperative, but we are saying the specialized nature of Saccos and the sophistication that is coming in these institutions, we need to take a notch higher. One of the questions we are debating that the audit firm must also do systems audit, and actually say before they did the financial audit, they actually did the system audit. Grace, is that a requirement for banks to have both system audit and financial audit? So there you are. So that your systems are tested, and that goes to ensure that the processes through which the financial data is generated and processed is actually tested and found to be good, rather than just looking at the balances. Okay, because we have learned, even ourselves, we are shocked at times when you realize the balances you give to us cannot be traced in your system. And therefore, by bringing on this, we want efficiency. That's why the MOU was between the DCI, which is constitutionally mandated to without criminal investigations, and then ourselves, so that we can collaborate to have efficiency. Okay, we do have only 5 officers in that unit, and therefore clearly they cannot be able to deal with all the, so there's still reporting that you do at the local level. You need to report at that level, and then report to us by writing to the authority through my office. Then it is when internally we assess, we say this case needs to be taken up, that we can refer to that fraud unit. But so that they are not overwhelmed by some of the small cases that we think, because at the end of the day, it's about also looking at the impact. Like issues matters, fraud, cyber crimes are critical. Those was giving priority. But I think what you want to say is that whereas we have that unit, it cannot deal with every crime that is happening. We want to deal with those that touch on the core business of the Sacco. And default is not an offense under penal code. It is not, because you have seen some of you referring, this member has defaulted to pay, and you write to us to say, dear Hapa. No, it doesn't work like that. So if you want clarity on what kind of offenses, then we are here to clarify that. On Friday through the the roundtable, on Friday, the plenary session, write those cries so that which offenses can we take. But there is a judgment call we exercise. It's just like in your neighborhood. You might be very bitter that the DCI at the local level, you report your house has been broken into and umepoteza TV na simu. Then the same officer in DCI office, there comes a robbery, maybe in the neighborhood, but there is murder and all that. Which one will we give priority? The one there is murder, is it? There is loss of life, right? Hii ya simu yako na TV utaambia kama ulikuwa umeinsure, later tujaze form uende uka. Are you together? While we try to, so there is a judgment call because his resources are not also infinitely available. So that is a judgment, but one, for statistical purposes, so that we can use their justification to ask for more resources from DCI, you need to report. Tell us this has happened, report. We have the statistics. As we prioritize, then we shall be able to engage DCI. We tell them, fine, I think the level of crimes, they have a financial crimes unit, bureau. Then we can have conversation through the one in charge to see, do we need more officers or not? But without reporting, we shall not know. So one thing, CEOs report. That is something we should report as fast as possible, but we do have, how much time do we, is it? We have not given a timeline, we need to report, but it should be as fast as possible so that we know what crimes are coming. Same to cyber attacks, but don't expect us that the following day, Peter, I sent my letter, you have not sent the officers. No, there is a priority question, in terms of resource so that we can focus on systemic crimes that we are noting. So you'll forgive us if we don't respond. Anti-money laundering, that one I think more will be discussed tomorrow. The data protection, you did talk about, this is a requirement, Office of Data Commissioner. We wish we had more time. We actually wait. Apparently, I was very happy because some of the issues you talked about are actually things we discussed when we were developing this program. But we realized that we need a week if we have to invite all these partners. But we already introducing them to you. I think there is a, like Ketsa already, I think they have a CEO's meeting they're having, I think June. I know we have referred them to FAR to speak to come and address them, but we shall endeavor as much as possible to actually create a forum. Even them, we are asking them, we are ready to work with you to organize a forum like this one. We cannot have everybody at our cost. We also don't have a limited resources, so we must also make sure that we invite. So for today, we have CBK because of the role they play. Then there is Safaricom, and then there is the Financial Reporting Center. Office of Data Commissioner, I think that maybe the next time, but in between, I know the requirement to comply by when? Data controllers and data processors. When are you supposed to comply with this? Yeah, by when? July, right? So maybe that is a challenge for us. You'll give us how you think we can address that. We are ready because we do speak to them, the Data Commissioner, Madam Immaculate Kasait, and they have already agreed to go to this one. So we are also telling them if there is a way you can organize a breakfast meeting at your cost, we will help you to mobilize these people. They are willing to learn. So we shall use other strategies to actually address the issues. It may not be possible to meet all these given that we also want to delve. And I like what you said. You want to come up with action points. This cannot just be another talk shop. And so that I don't talk forever, let me finish. The regulations 2010 affect you. And we have regulations 2020 as well. You'll note that we are talking of 12 years now for regulations 2010. You have tested this, you have applied, and we are cognizant that any regulatory framework should also be, alive to the changes in the market. And therefore, it can also be reviewed, changed here and there. And therefore, part of the conversation you want to have here from yourself is to tell us this part of the regulations, I think, is not serving its purpose. We have moved. So let's get proposals. Like my chairman said, it is through this forum we get policy issues that are synthesized and developed to what we call budget memoranda. And as you know, the finance bill, the content of the finance bill comes through the budget memoranda that are submitted. And usually we will defend those from the Sacco industry because part of our job is policy amendments and the like. But we want to come it from you. We've done it for you a number of times, but we don't seem to be having as high success rate because you don't shout enough when they go to your heshimiwas and the like. So we want them to come from you so that then you can actually rally behind us so that you don't become passive players in the policy making. We want you to be in the high table by understanding because they have come from you. We synthesize, we come back to you. By the time they are going through the CS to Parliament, you actually own them. So, and therefore, the point here is regulations 2010, there are a number of areas, whether it's governance, whether it's capital, liquidity, measurements, and the like, including investments. There is a question, some of you have even written about capital. I want to report that I think we should be contracting this week. Is that so? Council? Contracting a consultant to start a review of capital adequacy requirements. That work we should be contracting this week because it's one area. I think we have even written submissions that, can we review this? Some of you feel you have built more institutional capital, that is through retained earnings. You don't need a lot of high share capital. So I think that review perhaps will provide you with a platform to identify. But importantly is there are emerging issues. We have established a conduct regulation department, which basically is about consumer protection, is about member protection, it's about how are you protecting the rights of individual members. And remember, this is very pronounced even in the Constitution. There is even a consumer protection within the Competition Authority of Kenya. There is a whole unit dealing with consumer protection. I know some of you have heard the wrath of that authority. Yeah, anyone who has heard? Yes, very good. Yeah, so what do we need to do in matters member protection? Over to you. Those are issues. I hope you are noting that, because in the plenary we want to have a clear direction so that we can prioritize in the next 1 year, and so that when we meet here we can actually say among the 5 things, these 2 are done. We are here so that we work together in this journey, because like I said, we require you, the Saccos, through the CEOs and the chairpersons. We require the members. Therefore, member interests are central to what we do. We must be member-centric, and we require government through Sasra. With those very, very many remarks, that's where we are. Those are some of the issues we think we should engage so that together we can craft a strategy. I think my chair did also point out that we are in the cycle where we are making a medium-term plan for the 4th cycle of implementing Vision 2030, and it's done by sectors, financial sector, different sectors. So we do participate in the financial services sector led by Treasury, together with the central bank, other financial regulators. So we sit in that, and we have already had the first draft. And some of the issues we are talking to you about, then that becomes an opportune time when they are programmed in government priority, things like shared technology platform, matters consumer protection, matters digital, the deposit guarantee fund, because ultimately they require funding from government one or the other. And when you program them, they come in the medium-term plan, then funding becomes easier, because justification, you can actually say, yes, this is one of the issues. Alongside that, then, our strategic plan is also done, is aligned to that cycle. So part of what we are going to do here will inform our priority in the next strategic plan starting 2023. So this is very critical for us, that we shall prioritize those elements, because the new regulations require that you as an industry, primary stakeholders in matters Sacco Satis Act, that strategic plan, then we should be able to get your input. This is just but one way of collecting the input on what should be strategic priorities from a regulatory strategy perspective, so that we incorporate them. So with those very many remarks, I want to thank you for being very careful. Some of you live like this. I don't know whether they were saying Peter Tamaliza Rini, or they are just saying Tamaliza Hayote. But I want to appreciate for your listening. I really want to appreciate, and may we have very, very fruitful discussions. Back to the MC.